Please subscribe, like, and hit that notification bell. Thanks, guys. All right, sorry. Uh, Guys, we have a huge honor today at the North Star Bad Charts there. We have Peter Brandt, guys. Like, I know I had his book there. I bought his book, I don't know, maybe 12 years ago. That's where I learned about risk and money management, guys. Um, and Peter is like a no nonsense. That's the way I see you, Peter. You're a no nonsense, straight shooter. And hopefully we get to wake up people there to the beauty and the advantage of chart trading, but also it's not the holy grail, right, of predicting stuff, right? It's not the holy grail, but it does give you an edge. So welcome, Peter. There, very happy to have you on today. There.
Hey, it's my pleasure whenever I get a chance to maybe leave something behind me, because I'm not going to trade forever. I'm a lot closer to sunset than sunrise. So, but it's been a fun journey. I pinch myself sometimes and think, golly, I've been able to support myself, my family by trading these stupid markets. What's with that, right? Uh, so, but it's a journey. But it's a worthwhile journey for people who want to pay the price to have it.
That's
It's
right.
great to have you with us, Peter. It sounds like you developed a good sense of humor as well along the way. And I think when you're trading the markets, you need to stay pretty humble all the way through. And it sounds as though you've certainly managed to achieve that.
Well, Kevin and Patrick, the markets are known. If they were a restaurant, their feature would be humble pie, right? So, humble pie with every meal, and you have enough humble pie, you never develop actually a taste for it, but you're going to have to eat it. And so, over time, I think when you trade, you start taking yourself a little less seriously than maybe what you were when you started out, where you had all these grand plans, and it's a game for survivors. And if you can survive it and eat enough humble pie and be willing to get over the hit over the head enough times, eventually you start figuring it out. But it takes a while.
Takes a while.
So on that point, sorry, Pat, it looks like I interrupted your thought process there. How
Well,
to come?
well, I'm sure somebody who's a new trader and it's very rare. Like you've been in the markets for what, like 50 years? You've been trading, Peter?
49
49.
years this year. But actually, it's 50 years since I did my first futures contract, but it's 49 years since I joined the Board of Trades.
Well, I'm sure somebody like who's new is going to say, okay, what was Peter's first trade? Like, what was going through his mind? Like, what really, because you have to, something must have made you fall in love with this. To do something for 49 years, you have to love it. So I'm wondering if you remember, you could help us like a new viewer there and say, oh my God, that's how Peter started like 49 years ago.
Back then, we didn't have precious metal futures, but we did have futures for bags of silver quarters.
Mm.
And, prior to the conversion into zinc and lead and all the other sandwich junk that is contained in a quarter, we used to have pretty pure silver in quarters. And so the first futures contract out of the block was for these huge canvas bags of silver quarters, silver dollars, any coin with silver. And so that was kind of my first trade, was trading silver coin futures. So, but yeah, I kind of got the bug doing that. I didn't know what I was doing. I happened to be lucky enough that we were emerging out of Bretton Woods, and the price of precious metals and everything else was exploding starting like in 71, 72. So I was lucky in that I kind of got my surfboard on a wave that was going, but then, 75, I made the decision, this is really what I want to do. And so I left my job, which had been in the advertising business, working with a huge agency on huge accounts. And I used to go down the Board of Trade. I had a friend who was a soybean trader, and he'd invite me down, and we'd go up in the members' dining room in the fifth floor of the Board of Trade, overlooking the floor, and see fist fights breaking out. And it just was. I'm in the 20s. I'm in my 20s. When you're in your 20s, you don't think you can do anything wrong. You figure, I'm invincible. And I was married with two kids. And so I gave up a good paying job to go see if I could make a living at the Chicago Board of Trade. And uh, I was prepared to, if didn't make it, to go back and do advertising again. Of course, that never happened. And now I'm in my 49th year since I joined the Board of Trade as a corn trader. And I trade futures, a little Forex. I don't like the Forex markets. I think it's kind of highway robbery by the dealers, but I do trade currency futures, and I trade all global futures: Osaka, Singapore, London, Paris, uh, and so forth. Um, if it's a futures contract, and I do trade a little bit of ETFs. I don't trade stocks. It took me a while. I had to blow out, I think, 3, 4 accounts before I finally made it. To be honest, I thought I'd hit the ground running. They're handing out money at the Board of Trade. All I have to do is get in line and put my fist out, and they're going to force it upon me. And I don't. That was 1975, and I don't think I had a profitable year until 1979. But in the process, blew out a few accounts trying to figure out how this is done. So, I was lucky enough that I had some really, really, really good mentors that kind of helped me through some rough spots, and there were rough spots, and there were even rough spots once I began my career. There were a couple phases during those 49 years where I kind of hit turbulent waters for one reason or another. But I've managed to survive, and I enjoy it. The challenge to your emotions, and not just your intellect, but primarily to your emotions, are pretty amazing. So trading is really, for me, it's a game against myself. I'm trying to see whether I can manage the inner beasts enough to make money, because that's, for me, at least, what I just feel like. I've got good characteristics, I've got bad characteristics, and the bad characteristics want to sabotage me at every turn when it comes to trading.
Well,
Uh,
that's one of the questions that myself and Pat were sort of talking about, that we wanted to ask you, actually. I mean, you say you managed to survive. One of the things that we wanted to ask was, what are your strengths, and what do you think are the strengths that traders and investors need to be successful? And you've been successful over a long period of time. So how have you managed that?
well, I mean, it's persistence, right? I was bound and determined to do it, and I didn't wipe out. I didn't completely wipe out. So I was lucky enough to stay around long enough until things clicked and I gained traction, which was 1979, 1980. Uh, but I think it's persistence, but I think it's respect for how much damage the market can do for you. So it's awareness, it's self-awareness, I think, comes into it. I think the ability to be transparent with yourself comes into it. I think that I am risk adverse. I'm a risk adverse person. And there's an old saying that there are old traders and bull traders, but there are no old bull traders. And because they don't last, they never stay bold and become old. And so I've had a lot of respect for risk, uh, and so I'm cautious. And I want to be thoughtful. I don't want to be. I want to be process oriented. Even as a kid, pretty much everything I've done in life, I've tried to create grids and charts and process flow. right? I mean, I'm trying to break things down to their essential components, whatever it is. And I think for me, those first 4 or 5 years was really a matter of trying to understand what it was that I was trying to do and breaking it down into its components that were measurable, doable, refinable, repeatable, and figure out what it is that I have to do to be successful. How do I define success? And what do I have to do to achieve that success? And so for me, it was really almost like a math problem. I mean, it was a complex algorithm that I had to figure out bits by bits by bits to break a code. I'm not saying my code's everyone's code because I don't think so. I think there was a code for me, and I think there's a code for you two guys too. And there's a code for everyone listening, and it's a different code. But it's a matter of surviving enough to learn enough that you can finally figure it out. What is it that I'm trying to accomplish, and how do I go about it?
That's a fascinating point that you made there. Actually, I never quite thought about it that way. That the the code or the process for trading and investing is unique to each individual. We kind of assume that there is some kind of holy grail sometimes, that there's a particular answer for swing trading, short-term trading, or longer-term trading, investing, some magic formula. But we've all got different personalities, haven't we? We've all got different attitude to risk. And so that's an interesting thought, that.
Yeah, I've been lucky enough to really know a lot of really good traders. I'm talking about guys that have taken millions out of the market, in some cases billions. But at the Board of Trade at Commodity Corp, which was actually the biggest and best prop firm back in the 80s and 90s. So I know these guys, and I don't know two guys that trade the same way. I mean, when we get together as a group for various things from time to time, the last thing we talk about is what oscillator do you use? I mean, we talk about things like, does your dog know when you've had a bad day? I mean, it's stuff like that. It's how do you deal with it as a trader when you can never give your wife a budget to spend because you never know what you're going to make. So, but in terms of trading, I don't know another trader who trades exactly like me, because the way I trade is the way that I've developed the process. It's my personality poured into what I think are best practices. And then the challenge, of course, is execution. And people come into this with the goal of they just want to make money. There's profits here. I want to be profitable. And quite frankly, that's really not a very good goal as far as I'm concerned. The goal is trying to learn what you have to do over and over and over again to be good in all areas of trading. You have to be good at managing your emotions. You have to be good at your whole process, ordering your processes. How do you manage your order deck? You have to be good at how you use your time. You have to be good at how you study the markets, how you have to be good at how you size trades. You have to have a process for entering trades. You have to have a process for getting out of trades. You have to have a process for measuring metrics at the end of some period of time and understanding what they mean. And so there are just so many. For me, I just thought you go in and you start trading and you make money. Little did I know that was an unrealistic goal, an unrealistic perspective for what it was that I was going to do for 49 years. Because really, your goal is trying to figure out all of the things you have to do to be as good as you can be. And unfortunately, it's not meant for everybody. Not everybody was meant to be an NBA basketball player or a concert violinist. And some people really have what it takes to trade, and others don't. The ones that don't are the ones that take losses personally. They're some perfectionists. That's going to kill them. They react to emotions. They don't. They don't think in terms of. They're not disciplined. They're not patient. They're not disciplined. They're greedy. They think too much of themselves. So anyway, that's my 2 cents on it.
Well, it reminds me because I remember there was a quote, and you could tell me if I misquote in the book. You said at the end of the day, the traders were like glorified operators, right? Our mission is to like to have the process and just type in the order, follow the process, put in your sell stops, and then let the probabilities let like it's almost like the mathematics because you must I saw in your book like you noted the patterns that brought you the results, right? Was it a head and shoulders? So it's so funny because you're doing it. I was talking with Kevin before. You're kind of doing it like us. Like we actually see which patterns work best over time because we want to be scientific about it. We're like poker players. There's a lot of analogies of poker. It's like we know that pocket aces are going to bring us that. I mean, we know that if there's a turn card left, but so you have to think analytical and you have to be process oriented, but you need to do the math, right? You want to bring it as scientific as possible. So it's less luck and more probability oriented, right?
Yeah. I mean, I think there's something, it's statistics.
Statistics.
My trading operations over the year, I've taken statistics and random probability super seriously. I've really dug into it. And I wasn't a math major, I've learned it. But the statistical probability is, I mean, I'm right basically half the time. I've got a 50% win rate. So my going in assumption in the trade is I'm going to be wrong on this trade and going to take a loss. Next trade I'm going to do is going to be a loser. That I approach the markets that way, with the expectation that my next trade is going to be a loser. That somewhere this year I'm going to have 10, 15 consecutive losing trades. So how am I going to do that? How do I respond to it? But for me, you're absolutely right. I'm people glorify what traders do. I mean, my trading takes place between 4 and 4:30 every day when I enter orders. I mean, my job is to enter orders that make sense relative to the charts I'm looking at. And so that's always the big question for me is if I do this trade here, if I buy this market here, if I sell this market here, and I use daily charts and weekly charts, will I be able to look back at this trade and blow it up and put it on my wall and use stick pins and put a stick pin in? And can I look at that trade a year after the fact on the chart and say that made sense? I understand why I entered that trade. Winner or loser, doesn't matter, is relative to how I want to trade and how I want to operate. Did every trade I do make sense relative to the way I process information?
That's right.
And so something relating to what you just said just a moment ago, if anybody's watching this and thinks that a 50% win rate is not good enough, for example, you're probably not aware of risk and money management to the extent that you should be, because it's with a careful application of risk and money management that the figures that myself and Pat are looking at certainly imply that you could have something around a 60 or even 70% loss. I'll phrase that another way: 60 or 70% failure rate in your trades, and still be either breaking even or in fact even making a profit. You probably only need about 30 or 40% of your trades to be succeeding, and you'll probably be making money at that point if you're using risk and money management properly. And that's an absolute revelation to well, it was to me when I first learned it, and it will be to anyone who's watching this and doesn't quite understand that point. I think I just it was worth making that point there. Risk and money management is a huge part of the process of successful trading and investing. There's something we're going to ask you about actually relating to Bitcoin there, Peter, but it applies to anything really, and it was along the lines of with Bitcoin and gold, how do you see the position at the moment? Do you have any particular thoughts on them? But also, do you particularly care about whether it's Bitcoin or whether it's gold? Does it make any difference to you that it is Bitcoin and that it is gold, or do you simply trade the chart that you see in front of you?
Uh, yeah, I really don't care. I mean, for me, the only important thing is the scale that's on the right hand side of the chart. I don't care what the name is at the top of the chart. I mean, that's irrelevant. And so I'm trading price change, and that's all I'm trading is price change. But I do have kind of a love affair with Bitcoin, but that love affair is not expressed in the company's proprietary operating fund. I mean, I'll trade Bitcoin futures in my prop account, or I'll trade actual Bitcoins in my prop account. But if it's in my prop account, it's a swing trade. But separate from that, I've got some set aside money that's just designated to Bitcoin. And it has been for now a number of years, because there was a point where I just felt Bitcoin has a 50% chance to go to 1 million and a 50% chance to become worthless. And at the time, at $400 when I started, I felt like this is a pretty asymmetrical trade. And that's what I live and die on, is trades that are asymmetrical. And talk about asymmetrical trade, and I still believe it is an asymmetrical trade. I still think it has a 50% chance of being worthless. But for me, it's worthwhile having some small percentage of my net worth just designated to Bitcoin, if for nothing else, as an insurance policy against the disaster of everything else. So I just view it as the same way I do as paying a premium on my car insurance or home insurance. That for Bitcoin, for me, I like just having it as a hedge against the fiat currency disaster.
Right. That's the missing part, Peter and Kevin. It's the asymmetrical. So even if it's a 50%, it goes down. You're at $400. Let's say you bought just like 400, you lose one, goes to zero, lost 400. But then take your target, let's say 1 million divided by 400. That's the X-fold. That's the asymmetrical ratio that Peter's talking about. And we try to, like, Kevin and I, we it's like, once you understand that concept, you cannot unsee that concept of risk versus reward. And you just got to share it, but it's not intuitive for many people. That it doesn't, people, they see, oh, it moved 100%. They think their NAV moved 100%, but that's only if you risk 100% of your NAV. And we have moves, like we played stuff, it moves up 60%, but our NAV barely budged 6%. We had a 3-to-1, we risked 2%. It's like, people think we're millionaires because we played something that moved up 60, 70%, but no, but on the draw, our drawdowns are so controlled, right? And I remember what it was like, 1%, you could risk max on your trades.
Yeah, it's not even that anymore. I mean, that's gone down over the years. It
Okay.
scares me when I think about the risk I took early on some trades, back in 1980, 79, 80, 81. I think about it, I almost start shaking. Uh, but no, I usually risk 0.6% of capital on each trade. And so, just put that in some dollar amount to relate to it. Say per $1 million of total nominal capital that I trade, that's $8,000, $6,000 to $8,000 loss. And so that's what I try to keep it close to that $6,000 loss per trade. But and then it's just a matter of, for me, everyone's looking for a home run, and I don't think long term the money's made trading looking for home runs. I mean, home runs are glamorous. Guys in American baseball that hit grand slam home runs, that's wonderful. But you win games with stolen bases, singles, and doubles. And so that's my goal. I mean, my average winner in 2023 was 78 basis points. It's less than 1% of my total nominal capital. That's a good point you made, too, Patrick, as people you see on social media made 200%, did a 10x banger. You don't measure performance and you don't measure risk relative to a trade, to the margin used for the trade, to the price of the trade itself. You always have to measure risk and reward against the total pot of money that you have as a trader. And that's how it's measured. And for us, we know. I mean, we have pretty stable benchmarks. Year to year it changes, but over a long period of time, over the last, let's say over the last 10 years, our average profit's been 75 basis points. Our average loss has been less than 20 basis points. There's years when our average loss has been closer to 30 basis points and our average profit over 100 basis points. But, we know the standard deviation, given our metrics, we know the standard deviation of a 3% drawdown. We know what that is. I mean, that's our one standard deviation is 3.5% drawdown based on our trading. And so I think the more a trader digs into the statistics of speculation in the outcomes, the statistical variations in outcomes, the better a trader becomes. And you focus on the game. You don't focus on the outcome. You focus on the game. And more you focus on the game, outcomes come about. But the game is won or lost by focusing on the game itself.
Goodness, I have shivers, Peter, when you talk, because I agree with all that. I'm super happy you're a huge voice in this space, because it's not clickbaity saying what you're saying. It's boring. It's going to get 5 likes if you say stuff like that on Twitter, right? It's not clickbaity, unfortunately, but it's the secret for success, guys. Look, don't trust me there. Like, we've been doing this like for 10 years, whatever. Peter's doing it for like 49 years. It's just it's the process, right? It's like I tell people, are you going to go play poker with pros without understanding all the nuances and the rules? And even the pros keep learning every day. They keep practicing. And people go in trading, they have 20,000 on the side, and their best friend told them to put them all on XXX. They put it on XXX, and then it goes down. They don't understand. It's like, it's irresponsible almost what we see out there. It's
it's a huge red flag if you see anywhere, social media or anywhere else, someone saying, 100%, 200% gains, just 5-bagger, 10-bagger, and that's being sort of plastered all over social media. That's a huge red flag for me. As a scientist, as somebody who's interested in the facts of the matter and how each trade relates to your NAV, and what was your risk and reward when you took the position in the first place. If you're not publicizing that, then I'm afraid you're kind of being a little bit of a snake oil salesman by showing, the glamorous part of the picture, which is a tiny part of it, and you're hiding the 95% of the iceberg that's under the surface that you're just not telling the investing public. And anybody that does that really, in my humble opinion, needs to be avoided like the plague.
I just, when it comes right down to it, you build performance piece by piece, brick by brick. And I think early on in my trading, I'm talking about early 80s, I have huge gains and I'd give back huge losses. And it kind of came to the point where it's not fun having to make the same dollar over and over again. That's a burden. And it's actually, if you stay with trading, you find it's actually easy to make money trading. The hard part's keeping it, because you have to fight off everybody who wants to come back and grab some of what you made, through each and every trade. And so, I kind of view my job, Kevin, is my job is to take losses. My job is to make sure that I don't take anything but small losses. My job is to get out of trades that aren't working, because I found that the trades that will work will take care of themselves. If a trade goes my way, and I try to ignore it, it'll take care of me. And so for me, I found that just about year to year to year to year, and it varies a little bit, but almost every year I can know that 15% of my trades are going to produce just about 100% of my net profits. And so let's say there's a year I make $400,000. I know that 15% of my trades will equal that. And, and so I need to figure out what I do with the other 80% so that I don't self-destruct the 20%.
Mm.
And it's the Pareto principle, Vilfredo Pareto, mathematician in the 18th century in Italy. 80% of events produce 20% of events produce 80% of outcomes. And so I've never met a trader other than short gamma traders, which they'll blow up and lose all their money eventually anyway. But I've never met a trader who could tell me that their trading record does not reflect the Pareto principle. I've challenged everybody. Go back over every trade you've ever done and figure out what percent of your trades, of your best trades, equal what you have made net over a period of time, and it's going to follow the Pareto principle. And so if you just assume that you're a Pareto principle trader, which if you're successful, you are, the job is to try to figure out what to do with the 80% because the 20% will take care of itself.
Right.
And so I just need to make sure that I get out of losing trades, and I have to make sure that trades that start coming back at me and to slap me in the face, that I deal with them.
It's I was gonna ask you what like the best advice you could give to new or seasoned traders, but I don't. That's probably my answer would be limit your losses, work on the game, and the rest should fix itself.
Yeah, here's the reality. The reality, Patrick, is it does take 3 to 5, primarily 5 years from the time somebody says they're going to become a market speculator to really figure out what it's all about. Figure out the rules, figure out what your part is, and you've joined this grand play, and what's your role in that grand play. That takes 5 years to be able to answer the question, how should I trade given my circumstances and my capital for the best outcome, and having then realistic expectations for that outcome. I mean, world-class traders do 35 to 40% a year, world-class trader. And that's averaged over a period of time. But yet these young guys come in with the laptop down in their mommy's basement and expect to do 10x on their capital every year. I mean, it's just not, it's not realistic. It's not how it happens. It's not how it is. And so how do you keep your capital together so that at the end of 5 years, you've figured out how it works, and you still have your pot of money available to you to put to risk? And hopefully, I always tell people, big question I'm always asked is by younger traders is, I want to just be a full-time trader. What needs to happen for me to be a full-time trader? My answer is pretty standard. You need to have traded 3 to 5 years. You need to be able to ask the question, what do you have to do to be successful? And you need to know that. And it's a challenge to do it, but the challenge is to keep your losses. And so really the focus on the first 3 to 5 years is figure out how the game's played, figure out your role in the game, keep your money together, don't lose your money, protect your capital so that you have your capital. But if for someone wanting to be a full-time trader, I need to say, you have to have 1 to 2 years worth of savings set aside that's not your trading account. Cover the expenses of your life. You need to have that covered. So you have to have 1 to 2 years worth. You need to expect that in year 1, you're going to be a loser when you start trading. That's just the reality. That's just the way it happens. You need all of the money that you have at your disposal. You need to figure out how much do you have to make a year, a percent gain per year, so that you can pull your profits out and live on your profits. And give me a realistic figure. And a realistic figure is 20%, 30%, maybe 40% in a great year. Because the reality is, if you're just playing wild altcoins, I don't want to have this discussion with you anyway, because you're going to make a bunch and you're going to lose a bunch. And at the end of the day, you're going to lose it all. Unless you're the couple percentage of people who figure out how to make it, keep it. And so that's my advice to people is, don't expect that you're going to do a 10x every year and have that money played out. And you've already figured out you're going to do 500% a year, and that's how you're going to make your living. And you borrowed money from your mom or your dad's life insurance policy to be able to start off. No, you got to have the money. It has to be profits from things you've already traded. So anyway, I'll leave it there.
That's fantastic stuff. I think this is going to be a go-to video podcast for a lot of people. I think this needs to be something that everybody watches before they really embark on a trading investing career, because some real home truths there and some real reality checks for a lot of people who get swept up in the emotion of it all. Thanks, Peter, for talking to us today. It's been an absolute honour to have you speaking to myself and Patrick. I know Patrick is as thrilled to have you on our show as I am. Just so that everybody watching and listening knows where to find you, can you just remind everybody where they can find your work, Peter?
Yeah, I mean, they can find me on Twitter at Peter L. Brandt. I mean, that's I tend to appear all over the place, but I mean, that's my Twitter stream that I tweet about markets. I tweet about the crazy politics of the world, which I shouldn't do. I should limit my twittering. I don't even know what they call it, but I need to limit my Xing to markets and trading. But I get carried away seeing the crazy things in the world going on. But hey, thank you guys. You guys are doing a real service. I just think there are not enough people who are shooting straight with those who think they're going to become traders. And I encourage everybody to think they can become traders. I think it's wonderful. I've loved my life as a trader. And so, but I just think that you've got to be real with these people. They need to go in with their eyes wide open. I mean, they may start following me right at the time when like last year, August of not 2023, but 2022, July and August, I went 20 straight trades without a winner. And that happens. That's a rare event for me, but it happens. And so even if you assume you're going to be right 50% of the time, it's not right, wrong, right, wrong, right, wrong, wrong. I mean, you can have these huge strings of losses that you don't expect. And it doesn't mean that the way you're trading is bad. It just means that's the sequencing of events, a standard probability sequencing of events. So anyway, I appreciate that you guys shoot straight with your audience, and because that's what they need to hear.
Yes, thanks, Peter. Thanks again. Maybe one day we'll get to catch up again there. For me, I talk to you all day, talk charts, talk geek charts. We're a rare breed, but I'm very, very happy that we got to catch up there, got to talk for the first time. It was awesome.
Thanks, guys.
Thanks, Peter.
Have a good one.
Thanks, Peter. Take care.
Really appreciate it. Bye-bye.
All right. I have to go get Kev.
Okay. See you later, Pat. Bye.
I could go, babe. Please subscribe, like, and hit that notification bell. Thanks, guys.